Alright, for this video I wanted to talk about some of the basic concepts with respect to withholding foreign partnerships and non-withholding foreign partnerships. Now these agreements have been around for a while, but they've recently come to light or perhaps attention a bit more because on the Schedule K-2s, which were released in 2021 and 23, we now have a question asking us about this issue, right? So the very top of K2, is the partnership a withholding foreign partnership? Answer yes or no, and if yes, we would have a separate withholding partnership EIN, and we should enter that in the space provided. So, if you're completing K2 and K3 for a partnership, does this apply to you, and what are the rules, and how do these concepts work? So, foreign partnerships, by default, are not withholding partnerships. In contrast, domestic partnerships are. So if we have a domestic partnership, meaning an entity formed in the U.S., it is automatically a withholding partnership in that when the partnership allocates income to non-residents, right, if there's U.S. source income allocated to non-residents, the domestic partnership is legally obliged to withhold the tax, file the appropriate forms, and make sure that everything is compliant. Foreign partnerships don't have to do that directly, right? So foreign partnerships, when they receive U.S. source FDAP income, it's the payor of the income, the broker, the bank in the U.S. that's making the payment. It's their responsibility to withhold the tax at source, okay? Now, the partnership has to provide a lot of information in order to make sure the broker can compute the amount of tax withheld. But the point is the foreign partnership doesn't have that responsibility. So where does the withholding partnership agreement come into play? If a foreign partnership signs a withholding partnership withholding agreement, it takes on similar responsibilities to the domestic partnerships. So now, any payments of U.S. source FDAP income or other types of ECI allocated to the foreign partnership, the foreign partnership receives that income free of withholding tax, and then they allocate it amongst their partners, withhold the appropriate amount of tax, make all the payments and filings to the IRS. So what are some of the benefits of the WP agreements, and what are some of the drawbacks of these withholding partnership agreements? So the main benefit here is the foreign partnership is going to receive those U.S. source payments free of withholding tax. Right? So remember, if a U.S. broker, for example, is making a payment of U.S. source FDAP income and it goes to that foreign partnership, the broker has to withhold tax. If the broker is making a payment to a withholding foreign partnership, it does not have to withhold the tax now because the foreign partnership has represented that it's a withholding partnership and it's going to take on that responsibility. So this provides the foreign partnership greater control over the withholding taxes and the payments that are being made to the IRS. Now, the other huge benefit here is the foreign withholding partnership completes a W-8 IMI, the withholding certificate, but it doesn't have to provide any additional information on its partners, right? Its beneficial owners. And that's different from the non-withholding foreign partnerships because those entities have to provide that information to the U.S. payor of the income in order to make sure that they can calculate the appropriate amount of tax. So if we look at some examples here, and hopefully this will make it a bit clearer as to how this is working. So here's our fact pattern, and then we'll look at the impact with a foreign partnership that has no withholding partnership agreement, and then we'll look at a foreign partnership that did sign a withholding partnership agreement with the IRS, okay? So here's our fact pattern. We've got a fake partnership LP. This is a Cayman entity, and it was formed with 10 partners. So we have 10 equal partners. Each owns 10%. 6 of these partners are U.S. citizens, okay? So that means they're U.S. tax residents for federal income tax purposes. The remaining 4 partners are all non-U.S. individuals. And we're also going to assume they live in non-treaty countries, so the withholding tax rate that's going to apply to them is just going to be the base rate of 30%. So now the LP opens a U.S. brokerage account. It's buying U.S. stocks and bonds, and it expects to get paid $1,000 in U.S. source gross dividend income for the year. Now remember, when we have U.S. source dividends paid to non-residents, those would be subject to withholding taxes, but U.S. dividends paid to U.S. tax residents are not. And that's because U.S. tax residents, so U.S. individuals, we are required to file a 1040 every year, report all our income, and pay tax with our tax return. The withholding tax isn't taken off at source. Now, the U.S. dividends of $1,000, this is the gross amount. So this is the amount that we're actually due. And so now we have to figure out, well, depending on the scenario here, how much withholding tax is being applied, what kind of filings need to be made. So let's look at no withholding partnership agreement first. If we have no withholding partnership agreement, the Cayman entity provides the broker a completed Form W-8-IMY, and it checks the non-withholding foreign partnership box. Okay, so if we look at a W-8-IMY, we can see here W-8-IMY certificate of foreign intermediary, flow-through entity. So Chapter 3 status, we have to check the appropriate one. In our case, because it is a non-withholding foreign partnership, for this first example, we would check non-withholding foreign partnership and then complete Part 8 of this W-8-IMY. All right, so we provide that to the broker. Now, in addition to doing that, because we are a non-withholding foreign partnership, we also have to complete the second bullet point here. Right, we have to provide a schedule that shows how the income is going to be allocated to the U.S. and non-U.S. persons and what percentage withholding rate should apply. Right, and so that's so the broker knows, okay, if I'm going to pay you $1,000, I need to know how this is being allocated ultimately, and I needed to know what the appropriate tax rate should be on the amounts being allocated to those foreign partners, right? Now, if we look at some of the details here on the math, so we got $1,000, 60% or $600 is being allocated to those U.S. persons, right? Because remember, we have 6 U.S. partners, 60% of the fund, and so they're going to receive an allocation of $600 of that $1,000 gross dividend amount. So that amount isn't subject to withholding tax, right? Because it's being allocated to U.S. tax residents. The remaining $400 is going to non-U.S. persons at that 30% rate. So the broker knows, all right, of the $1,000, I've got $400 going to the non-U.S. persons, and the withholding tax rate should be 30%. So that's $120 I need to take off in tax from the payment. So the broker withholds $120, and then the remaining amount, the difference, $1,000 minus $120, $880 actually gets deposited into the account for the LP. Now, the broker will provide the LP a 1042-S that shows the $120 in tax, right? And then the LP can do its 1065 and 1042s and so on to allocate those taxes withheld to the foreign persons, right? Because they might need it to be able to claim foreign tax credits in whatever country they might live. Now, how does this change if we signed a withholding partnership agreement? Well, the Cayman Islands entity still completes a W-8-IMY, but in this case here, this little nuance, we would check withholding foreign partnership, right? Because we have entered into a withholding agreement with the IRS. So now that we are a withholding foreign partnership, that's our Chapter 3 status, we would complete Part 7 of this withholding certificate. Now that we've provided the broker a W-8-IMY that says we're a withholding foreign partnership, the broker can make the full payment of $1,000 right into our account. They don't have to worry about the withholding tax, right? They also don't need to see this second bullet point up here, a schedule of how the income is being allocated to our partners, right? They don't need that additional information. So it provides a little more privacy and anonymity from the Cayman LP's perspective because they're not sending out all this information to brokers and banks and everybody else. The IRS is still going to get the information on the K-1s, but the broker's not going to get it. So broker makes the full amount of $1,000 of U.S. source income deposited in the account because, again, the foreign partnership is acting as the withholding agent. They're going to take the responsibility for doing the allocations. So the LP prepares its 1065, 1042s, and 1042Ss to allocate the amounts and withhold the taxes. Now, what's important here is the math is going to be the same as this bullet point up here. So the foreign partnership is going to have $600 allocated to U.S. persons, $400 to foreign persons. So they're going to have to withhold $120 in tax and make that payment to the IRS, right? That's fine. But the point is, instead of the broker doing this, the partnership itself is now taking that responsibility. That's the big difference. So you, as the partnership, have more control over the taxes being paid, what's being withheld. You're doing more of the reporting, and the broker, you definitely make their lives easier. The broker doesn't have to get more in the weeds on what your operations look like. They just know, okay, $1,000 in U.S. source dividends, I'll pay it to you, we're done. Okay. Okay, so that covers it for this video. I hope that was helpful. If you have any questions, obviously, please feel free to leave me a comment below, and I look forward to seeing you again on the next video. Thank you.